As long-time viewers would be aware, I'm always concerned by how the mainstream media is interpreting the markets. If they say bubble, it means it's not going to pop. If they say it's a great time to buy, it's probably not. And if they say, hey, why don't you take a look at these because you know what, it's never going down, maybe that's when we should be paying attention. In today's video, we'll be taking a look at that and more to do with the stock market and markets around the world for the week ahead. There's a lot to cover. Stay tuned, guys. Okay guys, well, the best place for us to start this video is by taking a quick look at Friday the 13th of August's close. And here's a heat map of the SP 500 showing us the big money flow and which companies were doing well and which weren't. You'll notice straight away banks were under fire. This is because the US 10-year dropped over 5%. Yes, you heard me right. That was a massive drop off in the US 10-year, showing, of course, inflation is maybe not as big a concern for Wall Street and the traders out there as some would think. Semiconductors did well off this news, and we also had a mixture of results across the board. When we take a look at the major indices, you'll notice because of the 10-year dropping, because of the banks getting hit up, IWM was the weakest. If you ever trade Russell 2000 and you're not aware, it is made up predominantly, the biggest percentage is in the banks, and that is usually the thing that happens there. Sideways action on Nasdaq, S&P 500, and Dow, and that really just means, again, that the Wall Street kind of guys, they're not moving it, they're not ready to push the direction yet. Remember, we're in a very tight trading range at the moment, and the longer we stay in that tight trading range, the more likely we are to explode out in either direction. We've got here XLF, XLE coming up the weakest, and XLP and XLU coming up the strength. So this is usually a defensive style move. Remember, XLP is consumer staples, XLU is utilities. When they start to outperform the rest of the market, we need to pay attention. I've taken here from January to now in the markets, and what you'll notice is the entire time, realistically, utilities and consumer staples have been a terrible investment. Then just recently, notice everything else is very sideways except for the financials and maybe a little bit in materials. And other than that, utilities and consumer staples has started ticking up while the rest are ticking down. So if this continues and we don't see any weakness in the market, remember when utilities is outperforming the S&P 500 as a whole, usually there's something to be concerned about. Utilities going up very quickly, not something we want. We've discussed several times that we're in earnings right now. We are very well aware of this. We're kind of in the middle to the back end now. And if you think about this week, which are the big companies that people are going to care about? Well, many of you will care about Roblox. I'm going to be watching that one quite closely. That'll be interesting. We've also got Nvidia on Wednesday. It tends to have a decent result. Can it hold the $500 million valuation right now? We've got Cisco as well. Yeah, Cisco's one of those ones that always usually moves into the stock market news and then fails. And we've got SE, Walmart, etc., and plenty of others, John Deere, and some of the other ones. Remember, Earnings Whispers is a great resource here if you like to have a visualization of all of the data coming out. We also know that, of course, September is just around the corner. That's the weakest month of the year. So when you're looking at investments, when you're looking at even trades, it's always good to have these stats with you. And I've mentioned several times that over the past 20 years, this is for the Nasdaq, August, September are lackluster months. So I'm not saying they're always bad, but they are usually lackluster months. Low returns, and September, again, not being a positive kind of session. Take with that what you feel like. Let's have a look here at the dollar index to start off with the technical analysis for the week ahead. So dollar index failed to get through 93 again. Did not close above, struggled with this resistance and sold off. It's been a bit tough for dollar index because the news, of course, has been flicking it around each way depending on how it's gone. There was a trade here, and I did angle it for the Friday session. You'll notice you've got the peak, the trough, the lower peak, and then when we closed below this, this was really a signal to go short. And I actually think it could go even shorter here. Something like that 92 kind of 30 zone could be opened up by such a move like this. So another great peak trough, lower peak, lower trough kind of event. This is a perfect lightning bolt to the downside. Why do we call it the lightning bolt? Because it looks like this. At this stage, probably not too much extra action going on here in the dollar index. If we go over to the weekly, this is what it looks like, and it's in the middle of this range. You know, I wouldn't say it has clear direction at this point, though over the longer term, I kind of feel more bullish than bearish. However, that's just really the long term. We're not talking about, short, day, week, that kind of thing. Let's go over here to gold. Now, because the dollar index went down so much, that pushed gold through that previous support equals resistance area. We had the long leg doji, gold pushed through that. And of course, if the dollar index continues to weaken to that point we discussed, you would expect gold to come up to 1790. And I do expect sellers to be here for gold. 1790, previous resistances, previous supports, a very key level, and you would think that this is where the weakness of this initial flash crash into rally starts to come through. Be careful there, gold traders. We're not really out of the woods until you get past 1830 up here on the resistance breakout, and that resumes an uptrend. All this craziness that's going on down here really hasn't been completed yet. Just to put it in perspective of what happened last week, check out that mass pin bar. This is actually the rejection. And this would have flushed out so many retail traders. So the other way that people will be looking at it is they could say, okay, this is such a big rejection, Tom. We get follow through here and we do go past 1830. Wow, is gold back and it's going to be very strong. Yeah, I'm with you on 1830. This is going to be such a big level, and I've got set alerts for it, and we'll be discussing it here on the channel if it does occur. Let's move over to the US 10-year. This is the one that all eyes were on through the Friday session. Of course, this was probably leading to the best trades of the day, which were in the banks to the downside. And yes, look at this. Big turnaround here, actually closed underneath. And I think there were some early signs. We did mention them on this channel. We talked about the fact that it's already rejected once here. It's already rejected twice. I did say if it comes back down again, that is not a good sign. The 50 exponential was a problem with it in the past a little bit over here on the left-hand side. So you've got one rejection pull-up, two rejection pull-ups, and then it fails to close a high. Usually a sign or an early warning sign that things are not as strong as they may seem. Now we're underneath again. Do we return back down to this level? If we do, I think we start to put pressure on the whole market overall. I think the 10-year is still one of the things that I'll be watching throughout the week. Let's take a look at the weekly analysis here. Look at that. Two big bullish rejections followed by a bearish looking pin bar rejection. This shows the market has absolutely no idea on clear direction for what it wants to do. If we're talking about clearer direction, we do get some from the TLT. This is the 20-year bonds. Now, 20-year bonds, we had the long leg doji, we had the slight rejection, and it's come through strong here with a weakness in the 10-year over the Friday close. Look at that big bullish movement. We go back now into our trend line, you would think. So another couple of days, hopefully, of strength here from the TLT. And then we find out whether it sells off from this level and the TLT turns around and of course, the US 10-year as well. And if it does get back through, then we resume and we continue to go back up. That would be a very strong kind of move. Nice daily close there on the TLT. I think many people will be happy with it because when you go to the weekly, look at that big bullish hammer. We're looking for momentum to pick back up for this next week. Let's move over to Tesla now. Tesla was trappy. It was trippity trap. We got the closure above. That signaled, some initial strength. I talked about that would also create quite a lot of scale-ins. In the morning session, it ran heavily. It tried to get past the 727, but on no time frame, not even the 1 hour, did we close above. So the 1 hour here, you'll notice it certainly didn't close above. This shows that we hadn't closed out. I always say close is the key. It's still on previous resistance becomes support, so I'd like to see a rally through the Monday session for this one. I think Tesla has an announcement later on this week, like an AI day or something. If that's coming through, maybe it runs into that hype and that event, and this is certainly a chart to watch. I think it's getting more exciting, and options have now expired that were sitting around these levels, and a lot of them have expired worthless. So all eyes are kind of off it, and therefore maybe you should be taking a look at it. 727, we're looking for a closure above that point at this stage for the bull case. IWM, this is the Russell 2000, still weak in the middle. You'll notice it has absolutely no clear direction. Very tough trading here when you're trading in a range. You've basically got to be scalping, and that's all you can really do. Use your 10-year. I think the 10-year market is really pushing this around. So for 10 years up, then you can look to buy the Russell 2000. If the 10-year is going down, you can look to sell the Russell 2000. I think it's as simple as that. Move over to the QQQ, which is of course the Nasdaq, and you'll notice it has got rejection candles and strength on the weekly here. So little bit of strength. We go to the daily. It did bounce off the 20 moving average again. It's looking for a closure breakout above that 370 level. If it does get that, I believe we'll have a bit of a rally here in the Nasdaq for the back end of August. And we've also respected several times now the 20 moving average. So remember, for the bears to get back in control, the 20 moving average must be closed below. If it is, back to the 50 we go. And that will be, good little experience for, I think, the market to have. And I actually expect even further selling if it does get through these zones. However, it hasn't happened in ages. Look at this. Ever since this rally started in May that we've been following now for a long time, it's never closed below without it being a long leg doji or a bullish candle. So it's closed below. It's gotten a blow here, but it went bullish straight away. The bearish close, so that is the candle that actually closes bearish at the end of the day underneath the 20, is the key zone here. If you don't believe me, go and have a look at Tesla when it was breaking, and you'll see why the bearish close is the catalyst. Here's the S&P 500. We've still got our community trend line, which is now at about a 4,600 level. If it was to reach there, that's the one that's always caused the bigger rejections. And we've got our new smaller trend line here, which is about 4,500. So if the S&P 500 does tend to move heavily bullish here in the next week, ahead of some big economic data that's coming out, we could get like a 45, 30, something like that, and then reject off that zone. So watch these two levels. Definitely worthwhile having those trend lines, I think, for the S&P. And we move over here to utilities. I just want to show you that outperformance and that massive, kind of extension away now from even the 20 moving average. Now, this is not exciting percentages for many people out there, but this is certainly the biggest rally we've seen in utilities in quite some time. Ever since really April of 21. So the rally is starting to come through here for utilities. If this starts outperforming the S&P 500 by a drastic amount, we know big money's rotating into defensive style assets, and that always should have us concerned as big bulls in the market, because when defensive assets are being bought, it means money is going out of growth, and the only people being left with that are going to be the retail traders. We'll move over to crypto. Bitcoin and Ethereum and ADA, they're all going really well. Everyone's talking about ADA right now, which probably means that initial hyper rally that happened there is over for just the moment. Bitcoin's still looking pretty strong. I would have hoped that at this point it would have come back down to the 42.5 kind of area. I do think that that's open at any point to come back to this daily 20. I think daily 20 is going to be met by buyers just because this is something that's happened before. If we actually scroll back over, we have seen some daily buying off this daily 20 during rallies. You can see here daily 20 during the start of the rally, the big pullbacks that occur. This is probably the moving average that most people use, and therefore it's a good level. So I'd like it to come down there at some point. We've got our gain level here at about 51,000, which was our aim after we broke through. Wyckoff accumulation playing out to a T. Really nice stuff. Congrats for everyone that's in the crypto trades. It's been spectacular over the last couple of weeks. So has Ethereum, another one that's still looking very, very bullish here actually on the charts. But yeah, look, it's not exactly the best zone to ever get in there. You'll have to go and dial into the smaller timeframes if you want to trade it. So what are we looking at for the week ahead in terms of monetary policy and economic news? Well, we've got core retail sales 1 hour before the New York Open. That's 8:30 a.m. ET time, and we've got retail sales here. That's going to be a big bit of information that'll come out. Then after that, on the Tuesday session, we have Fed Chair Powell speaking. We know that he's like a Grinch, so the Grinch is going to come in for the market. We'll see whether he can stabilize it or whether he sends it down with some crazy comment. And then if we keep scrolling through, we have the FOMC meeting minutes on the Wednesday session. So some big news coming out here from the Fed. Again, the market will be looking at how do they interpret this data, including the core retail sales. Do they feel comfortable with the fact that inflation theoretically is dropping and everyone's feeling great about that? Or are they going to put a spanner in the works? Generally, I believe Powell goes with whatever kind of pushes the market up as much as possible. However, time will tell. Thanks so much, guys. We hope you enjoyed the video. We hope you have a great week trading ahead. And of course, join us 1 hour before the New York Open to come in and get some action on what's going on and what's moving for the biggest stocks ahead. See you soon. Bye for now.